Okay, good afternoon. Justin from Talent Force Recruitment. We are all about flexible, professional jobs, getting you the work-life fit that you're after. This time of year, people are regularly looking at their expenses, looking at cutting back on health insurance or creche or whatever it is. The elephant in the room when it comes to all of our budgeting is what?
The mortgage.
We're joined by Robert from Rockwell here. So mortgages.
Yeah, absolutely. Like for most families, it's usually anywhere between a quarter to maybe a third or 40% of your disposable income is going to mortgage.
Yeah.
So yeah, this time of year, we're looking at ways to trim our expenses. So what better way to do it than look at your biggest outgoing?
Really, okay.
And yeah, and the first question is, yes, you can switch your mortgage. You absolutely can. And you can even get a better rate with your existing bank, believe it or not. So very simply, it all depends on the value of the property versus the mortgage outstanding, the loan. Okay. So the loan to value.
LTV, okay? Right. Okay.
The loan to value. The better the loan to value, i.e. could be 50% loan to value, 60% loan to value, the better rate you can qualify for. And you may be even able to qualify for it with your existing bank, but they may not have been kind enough to remind you of this fact. So what you're going to have to do is call them up. They will send you out a form. You fill it in. You get an independent valuation report. That's going to cost you about €150.
Sure.
But you'll know in your heart and soul before you do that if it's going to be in your interest or not. And you submit it back to your bank and they will put you on the best rate they have for that LTV bracket.
Right.
But you can't switch to another bank if that's not the best rate in the market. Okay. Really good websites, bonkers.ie, by the way, for comparing the mortgage rates.
Bonkers.ie, right.
Yeah. If you can switch to another bank, there are incentives, obviously, to leave. So you can get anything up to €2,000 cash or 2%. So if your mortgage is 300,000, there are banks out there that will give you 6,000 just to switch to them.
So it sounds like the older the mortgage gets, the lower the LTV, the less likely it's advantageous to you
to leave.
To stay.
Oh, to stay, absolutely.
You should stay.
Yeah. You should be reviewing your mortgage every 3 years. Everyone thinks like mortgages for life. They're really not. You've got to pay them for life.
Okay.
But you don't have to stick with that particular provider for life at all. So shop around. You can save. As I said, there's cashback offers there with a couple of the institutions up to 2%. Right. So, and the costs associated with it are the valuer. So I said €150, and your solicitor's fees, typically about €800 to €900.
Okay. So for less than €1,000.
Yes.
You can save €1,000,
Yeah, so your typical saving that you would see in the market would be 0.5%. And again, if you owe 250,000, 0.5% is basically €100 a month over the term. And that's so with a reducing balance, 20-year term, that's roughly about €18,000 that you saved just by picking up the phone, calling another bank and saying, would you like my business?
Okay. And is your current provider likely to be providing you the best rate possible?
No.
Ouch. Robert. So mortgages definitely worth looking at.
Absolutely, yes.
The mortgages for life,
yes,
or for 20 or 30 years, but your existing provider.
Not with the provider. No, shop around.
Shop around.
Yeah.
Again, it sounds like just pick up the phone.
And it's, again, if you can put another €100, €150 a month into your pocket, why wouldn't you?
Super. Robert from Rockwell, thank you so much for your advice.
You're welcome.
This time of year, it sounds like it's another expense that's perhaps just worth looking at or figuring out what we all need to do to shake it up. Robert, thank you so much.
You're welcome.
Thanks for your time. Just from Talent Force. Have a look at our flexible professional jobs on talentforce.ie or give us a call 01908 1514. Thanks for your time. Take care. Bye bye.